Yet another state-owned entity, or SOE, faces liquidity woes. The Land and Agricultural Development Bank of South Africa, which is an entity specialising in farming, is currently seeking waivers from its creditors after missing a loan repayment. This has a ripple effect, triggering a default which could cost the government 5.7 billion rand. Joining us via Skype, we've got Dr Sifiso Ntombela, a trade economist at the National Agriculture Marketing Council, to discuss this matter. Great to have you. Thanks so much for joining us, Sifiso.
Good morning, Lynn, and good morning to your viewers.
Can you give us a summary, or a brief summary, that is, of how dire the current financial situation is at the Land Bank?
The situation is looking relatively very bad for the bank. They are struggling to basically honor their commitment in terms of repayment of loans, which will certainly have a serious ripple effect on the sector, considering that agriculture is one of those important sectors that is even essential during this lockdown, and the majority of farmers that are basically producing food we desperately need during this time and beyond the COVID virus are basically dependent on the viability and the well-functioning the land bank, so that they can be able to provide them with the capital they need to continue doing the operations that they seek to have.
Yeah.
So in essence, basically it has a serious effect even to the livelihoods of every South African that is currently happening.
So other than the government guarantee, who do they actually owe money to?
So I think maybe to just put things into context a little bit, is that when you're looking at the land bank, it's a state-owned institution that has a dual mandate. So what basically that does is that the land bank is supposed to function as a bank providing the loans into all those that are in the farming system, but it also is supposed to be carrying the developmental mandate of basically assisting with the emerging farmers to get into the sector. Now, what has been the factors that have been accumulating over the years? I could broadly assign them into two issues. One is what we could call governance and operational deficiencies, and the other one is mainly the shareholder recapitalization of the bank. Now, we will know that the bank basically supposed to acquire money in the capital market so that it can be able to finance all its loan. Now, that on its own, the heavy reliance of the bank into the capital market put it in a disadvantageous position in comparison with other commercial banks that provide the same situation. Because now they have to go borrow the money and come back and be able to service that money, which increases the cost of servicing. But they still have to basically drive this developmental mandate, which is very expensive if you do not have sufficient support from your shareholder. That has somehow put the bank onto the back foot as comparison with other sectors. And that basically led the bank to not be able to sufficiently do its developmental mandate.
Yeah.
Another point which has basically been looming over the years, which I could group it into the governance and the operational deficiencies, is that there has been some cases in the bank itself where there's some cases of maladministration and some governance issues. But over the last couple of years, they have been putting some strong measures to basically counteract that and resolve that issue. But in itself, the bank is basically servicing a clientele that is very high risk. And over the last, since 2015, we have seen in the sector numerous external shock like the drought, the outbreak of the animal disease, listeriosis that almost wiped out your pig industries. So all those have had effect into the farmers and in their ability to basically service their loan in the bank, ultimately limiting the bank's ability to also service its own commitment into its investors.
Yeah.
So that has been the case. But another issue that needs to be taken into account is basically also the repositioning of the bank itself, because you know that the bank focused mainly on its traditional methods of looking at the farmers with basically the capital, where they farming the land, basically they financing the land. But you've seen a different change in the farming communities where the value chain, there's more players, especially starting to play up into the downstream of the region where the money is.
Yeah.
Now, the traditional method of basically only financing and having a security as the land, it has somehow limited the bank to only attract those clientele that are basically not having a liquidity that it needs, which all basically limit the bank's capital adequacy, and hence it's find itself into this position it has today.
And what a difficult position it does find itself in, because at the end of the day, I mean, they've been downgraded by Moody's recently, and this is now in junk status. I mean, this loan guarantee was just given by the president 2 months ago. Now, you've got so many SOEs that are in dire straits right now. SAA, this is about to, I mean, we don't know what's going to happen there. That's still something that is of question when it comes to their future. There's also the talk of Eskom. No one knows what's going on at Eskom. Telkom, we've got now the Land Bank. I mean, is government paying enough attention to the Land Bank, though? Where in its list of priorities, where does the Land Bank stand?
I think they are paying some attention, but of course, it's certainly by the look of the developments happening might not be sufficient at this stage. And I think the importance of the bank has somehow not been overemphasized, given the fact that if it's not supported and basically given the lifeboat that it requires, it could put the food system in jeopardy in this country. You will know that as one of these farmers are banking on the bank, for them to basically now find a new financial institution that can assist them to provide these financial facilities, it would take seriously capital even from those farmers itself. But I think, as you've narrated, that it's not only isolated circumstances around the Land Bank. All other associates are suffering the same fate at this stage. And I think this calls for a broader understanding and discussion around the shareholders and the government to say, how do they want to drive this developmental mandate, and how do they really want to see this developmental financial institution servicing the sector, and what kind of financial allocation and the management styles that they need to have, so that you don't often every day you wake up you're having the situation that some of these institutions are not functioning and they are basically facing a difficult time, as the Land Bank has said. Because one of the difficulties, if you just now start only paying attention when things are at this dire situation, is that in the medium to long term you start even losing the capable human bodies within this institution that are not able now to service even the efficiencies you will need when the bank is basically at the end find the capital in need. So you will start having a lot of experience, well-knowledgeable people leaving the bank and going to other financial institutions, because some of them are very marketable and we know how the market works. It will take all those that are very experienced and skillful. And that in its long term will also basically reduce the ability of the bank to execute its mandate and service the sector correctly.
Finally, the Land Bank's financial crisis, of course, how is it going to impact food security in South Africa? Because that's our biggest concern, particularly amid the coronavirus pandemic.
It will have a direct impact. You know, when you're looking at the grain sector, which is coming up in the harvesting from the later this month, like in the maize and other grain commodities, they are preparing to basically purchase some of the machines, harvesters and other equipments that they need to basically quickly take the food out of the fields and put it into the storage and to the processing. And they need some financial solution to do all those things. But at the same time, you know that the sector is preparing for planting of the winter crops. They need access to money so that they can be able to secure inputs, they're able to secure seeds and all other things. Even the fruit industry, for that matter, is also preparing to go to the pruning season. So there's a whole lot of activities that needs to be taken. And agriculture is one of the sectors that deal with the biological asset. And the risk with the biological asset is that if you don't do the right things at the right time, you risk basically losing the value of all that asset. And it could take you 3 to 5 years in some sectors to basically regain the productivity of those assets. So it will, if it's not provided at a very urgent time during the timing, you run the risk of farmers losing the critical timing into their operation, which will basically have a direct impact into the food security availability. That will be seen in a couple of months with the increasing food costs, which will definitely impact also on the food security countries. We already know we're sitting with 14.8 million people that are food insecure. And these could actually impact those numbers negatively.
All right, we've got to leave it there. Thank you so much for talking to us about this. vitally important issue. Dr Sifiso Ntombela, who is a trade economist at the National Agriculture Marketing Council, talking to us about the massive financial problems at the Land Bank.